50 points up on the Nifty. Aman Chowhan is our next guest on the show. He's, of course, the fund manager at Abakkus Asset Managers. Aman, great to have you on. Thank you so much for joining in. So first, let's start with what you've been doing. I mean, just run us through if there are any changes in strategy, portfolio, some profit taking, any churn that you might have undertaken in the portfolio, given how a lot of the industrial stocks, manufacturing stocks, which is a theme that you folks have liked in the past, where, I mean, a lot of them have also, of course, cooled off in the correction.
Frankly, this will be not much of, you can say, action in the last month or so. Broadly, we thought that anything that we do, buy or sell, would be more of an emotional decision in current times, and we would like to take a more practical, rational decision. Just waiting for the markets to settle down. Today is the first good day after a long time. Last 2-3 days, market seems to be stabilizing. So just waiting for 1 or 2 good days like this before we take some action. So as such, last month or so, no major actions. Wherever we were anyway adding to our positions, we continue to do that marginally. No major change per se. Within sectoral, yeah, we increased our financial exposure than what it was a month back. Some of the fringe holdings we have reduced. No new names. Broad decision that would not like to add new names in the portfolio. In case we want to deploy cash, we'll do in the existing names as wherever possible. So that's broadly what has been.
You said that you have reduced some of the defense holdings and added to financials, right, Aman?
Not defense holdings. We don't have any defense names in the portfolio per se. So we never had any major defense name for the last year or so. Fringe holdings, wherever there was a small tail.
Fringe holdings, okay. Fringe holdings. Okay, got that point, Nigel.
All right. Hi, Aman. And good to see you in. Aman, a couple of other questions. What is the current cash levels that you're sitting on? And what about your clientele? Any nervousness out there? The checks are continuing to come in there?
Checks continue, but they are less than what they were 2 months back or 3 months back.
Okay.
Broadly, everybody wants to have a review call. So there's no nervousness per se, besides the select few clients. But whether you're making money or you're not making money, whether you're a 1-year-old client or 6-year-old client, everybody would like to have a review call just to get a sense as to where the markets are, what's and I believe the call is equally divided. There are enough number of people who are also asking, is this the right time to further deploy cash or want to increase the exposure? At the same time, there's enough number of people who are also worried that they have seen 20-25% drawdown in the last 2 months, and now what should be the way out? So it's a mixed bag. So far, no major redemptions per se. Yeah, but inflow has slowed down definitely.
Okay, all right. Aman, in the past, I've observed, at times you'll get the cycles very correctly, particularly on the metal stocks. Now, China is upping their game. I understand right now, I'm just looking at my screen, and Steel Mint has reported that steel prices are going to go up by 1,500 to 2,000 rupees. This is broadly anticipated. All of last week, we was hearing this itself, that in March it'll go up. Anything you like, any particular commodity that you like to play in this sort of an environment?
We have a high single-digit exposure to metals. That would be among the top 2 metal companies, and we have the largest stainless steel company in our portfolio. So between these 3-4 names, we have a decent metal exposure. We were quite positive on metals 2 months back post the China stimulus announcement. After that, we turned neutral when the Trump uncertainty set in. So as of now, we are neutral. We are not adding further to exposure, but whatever we have, which is a high single digit, we continue to stay there. Depending on how eventually the tariffs and whatever Trump eventually ends up doing, we'll take a review call. But right now, just holding on to what we have.
Okay, all right. Just to confirm, stainless, that's the obvious choice. And the other 2 metal names that will have the larger ones, both from the ferrous pack or ferrous and non-ferrous?
So it's a lot. It's a multi-metal company which is going to split its business.
Got it.
Aman, as I can see in your all caps PMS strategy, obviously banks are 15%, which is the lion's share. There is NBFCs, which is 11%. But industrials are also, like I was saying, you guys have always liked industrials as a space. What is your thought there now? There's a huge valuation correction that's happened. Stocks that were trading at 90 times forward earnings, 100 times forward earnings, they've cooled off a little bit. But are they at levels where you would top up and add more? Or do you think, a bit of that industrials story is, at least from a market's perspective, I mean, the next run will not be led by industrials? What's your sense?
See, the super expensive industrials, which was like 70, 80p, they were never in our portfolio. That 60p in this correction has become 40p. 40p, frankly, still not an entry level P, right? So those names were still off our, you can say, radar. They still continue to be off radar. Another 10-15% correction, maybe then we start looking at them. Whatever exposure that we have would be predominantly mid-size industrial companies. They could be like cables companies, wires company, some you can say capital good company, engineering companies. That's bulk of the exposure that we have. That space continues to look good, especially because you see the government spending has come back, right? And when you start seeing the monthly numbers, the January numbers, the IEP numbers that are coming, they are all showing an uptick. And I'm expecting a good, you can say, order inflow from the government for the EPC side also. So putting all these things together, I think that segment looks good. This was a market performer or slightly better than market performer over the last year or so. Defense, railways, PSU is where the momentum was. In the next round of rally, whenever it happens, next 3 months, 6 months, we don't know. But whenever it happens, maybe there will be a sector rotation. Industrials stand a fair chance, along with financials, to be leading that, you can say, rally.
Okay, so you're saying maybe industrials will still get lots of attention in the next move, the next rally that we start seeing. You mentioned cable and wire, so I have to ask you this question, right? There's a big conglomerate entering the space, and it caused quite a flutter in the stocks, and there was a conference call, and now it seems that, they're not going to be too aggressive, but still, I mean, it's the Birla Group. So, what is your sense on it? I mean, are you worried about some of those holdings right now? Just looking at what happened to the paints side of the market when the same group entered paints.
Right. So, not too worried, at least in the near term. In the next 3-4 years, 5 years, yes, there would be a competition, but by that time, the industry would also have been grown. So effectively, the market share that they are targeting is 1 year growth for this industry. So hence not worried. We are also not drawn a parallel with the paint sector. I know from where you are coming. See, in paints, the demand also, you can say, normalized, or it was like a low single digit to a volume degrowth with the paint industry saw, and that was one of the major reasons for the PE derated to happen. It was not just the Birla entry, it was the whole volume slowdown and degrowth also in some quarters for the overall paint sector. That is not the case for cables and wires as of now. Demand is strong, order book is strong. Next 2 years, there's decent visibility because of solar and renewables. We are seeing increased T&D spend happening because one has to strengthen the grid dimensions have to change and so forth, right? So I'm not too worried that it's going to be a significant derating the way it happened with the paint sector, just because the growth rate is holding on and is expected to stay strong at least for the next 2 to 3 years.
Yeah, I only asked because I think maybe Nigel will agree, because every time there's major disruption, all companies tell you that there's enough demand. It's a big sea out there. Everybody can go and fish.
Yeah.
But then the paints example just kind of, put memories, kind of made memories a little jittery.
The core difference between paints as well as cables and wires is that in the paints business, there were 5 players that had 90% of the market. Here, there are 5 players who have 50% of the market.
So large
While in
unorganized
paints, you
sector.
had 1 player that had 55% of the market. In cables and wires, you have 1 player that has the highest is around 17%. So the short point is it's a far more fragmented
market.
That's what. Aman, I wanted to ask you about that point that you were adding financials, the only space where you'll have added exposure. What have you all added? Because I'm seeing that you have a housing finance company in your portfolio. You'll also have the larger banks, HDFC, Axis Bank as well. So what have you all added?
So we added more on the private banking space, and we've added to the existing exposure to the NBFC. So wherever there was a price correction, we added to the existing names. We're not taking any new exposure per se, but yeah, overall exposure would have gone up because we averaged ourselves in this correction.
And on your pharma portfolio, you're not too worried about what Mr. Trump is saying?
Not yet. If one has to worry about Trump, then you are worried for the whole portfolio because it looks like he wants to put tariff on anything and everything that America consumes. So just waiting out to see as to what eventually happens. What is more worrying right now is not just what the Trump is planning, is also that how the world will retaliate. It cannot be that you have a 25% tariff on a China or Canada or anybody else and they'll be sitting idle saying thank you, right? So they are going to retaliate, whether by countermeasures, by counter tariff or something or the other, right? that I don't think market is yet prepared. What market is still focusing is what Trump is going to do. We need to also focus as to what response others are going to do once the Trump is done, right? So for that reason, maybe in the near term, global volatility is something one of the big risks for the Indian markets.
Right. Aman, and it's I wonder whether or not he can hold on to this stance of putting in tariffs, because you're going to hurt yourself, right? The US economy is going to get hit, GDP is going to get hit by 0.5%, inflationary it's going to be in nature, the Fed won't be able to cut. So we'll have to see whether or not it's just a negotiating tool, or in fact, President Trump is going to stick to these tariffs and put the entire global economy and global markets in a tizzy. Thanks a lot, Aman, for joining in. Always a pleasure having you on the show. Thanks a lot for giving in.